Okay, hi everyone. The time now is 7:30, so we'll start promptly on today's session. So just a very quick introduction first. My name is Marcus. I'm from Society Generale. We are a French bank. So I'm from the cross-asset listed distribution team, where I manage the DLC business here in Singapore. So the DLCs, as some of you might know, are listed and traded on SGX securities market. So Society Generale, we are the issuer of this daily leverage certificates DLCs, and we listed on SGX, where we also market make during the Asian hour during the day for investors to buy and sell the DLCs. All right, so thank you very much for coming for today's session on Trade the US Stock Market Indices during Asian hours with DLCs. So this session today will be a pretty short one, where we try to expound on this newly launched DLCs on the US market indices that we have launched in March and April this year. So it's something that we've been working on for quite some time, and we finally managed to launch it on SGX securities market. These DLCs on the S&P 500 index as well as the Nasdaq 100 stock index. All right. So some of you might be wondering, what's so special about it, right? So this DLCs on US indices, the novelty of it is that you are able to gain exposure to the US stock market during Asian hours. All right. So it is traded on SGX securities market during SGX market hours between 9 a.m. to 5 p.m. So that's when these DLCs will offer investors exposure to the US markets during Asian hours in case there's high impact news from China side or from the Asia side that could potentially impact the US markets or your investment portfolio, your US stock investment portfolio. You can use these DLCs to be able to quickly react to the news. This DLCs on S&P 500 index as well as the Nasdaq 100 index that you can use to also get in early before the US market opens. If there's a very big move during Asian hours, you can use these DLCs to have that early mover advantage to get in exposure to this US stock market indices before the US opens, at night for us here in the Asian time zone. All right. So that's quite interesting about that, and we have launched it on SGX for since March and April. And we have seen growing traction on these DLCs as investors see the value of having this US exposure instrument during Asian hours. All right. So, but before we go into the DLCs, just a few things I want to highlight. Well, we have a Tiger Brokers DLC promotion. So we'd like to really thank Tiger for inviting myself for this session today to share more about this US indices DLCs that we've just launched. They have a promotion right now for the DLCs where, if you trade the SGX listed DLCs, SocGen DLCs with Tiger Brokers, you'll be able to claim a $150 reward. All right. So do log into your Tiger Broker app or, even on the online app, on the online browser and to find out more about this DLC promotion. I'm pretty sure you can find it under your account, and then there's a rotating banner there. You'll be able to see this be rewarded when you trade SGX listed DLCs Tiger Brokers banner for the DLC promotion. All right. So if you're new to DLCs, please look out for this, as you can be rewarded as you trade it, right? So it's a free $150 if you are going to trade the DLCs anyway as well. All right. So do look out for it and find out more about it over there on there. So before we go into deep dive into what the US indices DLCs are, how does it work, etc. I think the fundamentals of it is really to look at what the daily leverage certificates DLCs can offer, right? We must go back to the fundamentals first. What does a DLC do, right? A DLC is a structured product that's listed on SGX securities market. So you can trade it through your regular stock brokerage account. As I can see here, it's traded like a stock. You can trade it through your Tiger Brokers account, your DBS Vickers account, or even your POEMS account. All the retail brokers do offer the DLCs, including Tiger Brokers. And SocGen, we are the designated market maker for these DLCs. So we listed on SGX, and we will also market make on these DLCs throughout the day, providing liquidity, B&R's volumes and quotes for investors to buy and sell the DLCs throughout the trading day, as long as the underlying exchange is open. All right. So this DLCs is a structured product with a fixed daily leverage. It offers you 5 times or 7 times leverage on the underlying asset. Whether it's an index or a single stock, every day on a close-to-close basis, you will get that 5 times leverage. All right. So in the next slide, I'll share a bit more. Where does this 5 times leverage come from? Okay, we have a wide range of underlyings right now. We do have over 60 stocks that you can gain exposure to, Hong Kong and Singapore stocks for that matter. And we also have 7 indices that you can gain exposure to. We recently launched the DLCs on STI, Straits Times Index as well, 2 times, 5 times, and 7 times. But we also have the MSCI Singapore Index DLCs, Hang Seng Index DLCs, Hang Seng China Enterprises Index DLCs, Hang Seng Tech Index DLCs, and of course the two US indices, S&P 500 Index and Nasdaq 100 Index. All right, so we do offer a wide range of single stock and indices for you to gain exposure to. All right, you name it, you got it. Over here, Tencent, Alibaba, some of the key ones in Hong Kong. We do have the DLCs, 5 times long and short DLCs on them. In the Singapore side, we also have DBS, OCBC, or Singapore banks, as well as all your blue chip stocks that are mainly in the STI constituent stocks, right? So quite a wide range over here, and this is not an overnight thing. We have been gradually expanding the shelf since we made our debut on SGX 5 years ago. So DLCs do turn 5 years old this year. We debuted on SGX in July 2017, where we had 3 times and 5 times leverage DLCs on the Asian indices, mainly the MSCI Singapore Index as well as the Hang Seng Index. But we have seen expanded in 2018 to single stock DLCs, and we've not looked back since then. We've continued to expand the shelf, but more single stock underlyings, including a lot more on the Hong Kong side. We've also launched the Hang Seng Tech Index one in 2021. And right now in 2022, we've done the DLCs on the US indices, S&P 500 Index, as well as the Nasdaq 100 Index, as well as the STI Index. And total, we do have more than 250 DLCs listed on SGX securities market now for you to choose from, offering exposure to 7 indices as well as over 60 underlying stocks over there. So this is quite a wide range for you guys to choose from, for investors to be able to gain exposure to all these different underlyings, even the Hong Kong ones and the US ones, very much here on SGX securities market. So you don't go to the Hong Kong Exchange or the Nasdaq to trade their instruments. You can gain exposure to these 2 markets here on SGX securities market. Okay. So as I mentioned, let's go a bit deep into the US indices right now. This is the US index DLCs. So we do offer exposure to the S&P 500 Index DLCs as well as the Nasdaq 100 Index. Okay, so these are the 2 benchmark ones, and of course we are looking at more US indices that we can launch as well. We are looking at the Dow Jones Industrial Average. We're also looking at the Russell 2000 Index to have DLCs long short on them. And we also, in the future, fingers crossed, one day, hopefully we'll get to offer US single stocks with DLCs on them in Singapore on SGX securities market, but that's still a bit far out. All right, so this S&P 500 and Nasdaq 100 Index DLCs, they come in both a long and short DLC, and you have the 5 times leverage for both long and short side. So for back to basics again, for a long DLC is for investors who are bullish on the underlying index or the underlying stock. So if you want to buy, you want to get exposure, you're bullish on Nasdaq, for example, you think that you'll go up, you'll rebound, then you want to buy the 5 times long Nasdaq DLC over here, CZFW over here. All right, that's the stock code. This is the Bloomberg code, but the first 4 characters, CZFW, is the stock code. So you would, key in CZFW into your Tiger broker app, and then you will be able to retrieve this Nasdaq 5 times long DLC. All right. But on the other hand, if you are bearish on the index, you're bearish on Nasdaq, for example, you will buy the short DLC. All right. So you'll buy this 5 times short Nasdaq DLC CYEW over here. So this DLC will gain in value as the underlying index falls. All right. So if Nasdaq corrects further, then this Nasdaq 5 times short DLC will gain in value with that 5 times multiple. Okay. So that is these are the DLCs that are listed for the Nasdaq and S&P 500 Index. We do offer another 2 pairs of Nasdaq and S&P 500 long short DLCs, but they are at different price range, probably lower. We do offer them at the 50 or 60 cent level as well. This is just to offer investors more choices in terms of one DLC that is priced at 150, while the other DLC is priced at 50 cent. For this matter, both DLCs will still give you that 5 times leverage on a close-to-close basis. Just that the higher price DLCs tend to be more sensitive. So for every say 10-point movement on Nasdaq, this DLC will move by 1 tick. Whereas for the less sensitive DLC, every 50-point movement in the Nasdaq will produce 1 tick on the Nasdaq DLC, right? But there are different price ranges. I'll elaborate a bit more later. Hopefully I have some time after this presentation to show you our website, our DLC website, to show you what the sensitivity is and how to choose the DLCs for your target exposure. All right. So these are the four DLCs that 4 of the 8 DLCs that we have on the US indices, that S&P 500 and Nasdaq index. Okay, so remember that these DLCs are listed on SGX securities market. So they are traded only during Singapore time zone, 9 a.m. to 5 p.m., excluding the lunch break. And you can gain long and short exposure depending on which one you buy, the long DLC or the short DLC, and with 5 times leverage on each side. Okay, so back to basics on how does the DLC provide leverage. All right. So it's important to understand that all DLCs, no matter whether it's S&P 500, Nasdaq, Hang Index, SIMSKI, etc., it will give you that daily percentage performance of the underlying asset times by the number of the leverage factor that it has to give you that daily percentage performance on the DLC. This logic, this formula is the same for all the DLCs. If the underlying stock or index moves up by 2% from day two from day one on a coast-to-coast basis, right? Then the DLC, the 5 times long DLC will give you that 10% movement gain, while the 5 times short DLC will give you that 10% loss. Will lose its value by 10% on the short DLC. And vice versa, if the underlying index or stock drops by 2% on a coast-to-coast basis, today it drops 2% from yesterday's close, then the short DLC will gain in value by 10%, times 5 of that, right? 2% up 10%. It will drop. You'll gain in value by 10%, the short DLC, while the long DLC will fall in value by 10%. So every day on a coast-to-coast basis, the 5 times DLCs will give you that 5 times movement. In other words, 5% if the underlying moves by 1% on a coast-to-coast basis for all the DLCs, regardless of the underlying index or the stock. So in this example here, you can see a very illustrative example. If S&P 500 index goes up by 2% from 4,000 points up to 4,080 points on day 2, then the S&P 500 long DLC will gain in value by 10%, while the S&P 500 short DLC will fall in value by 10%, and then vice versa if S&P 500 drops in value instead. Will gain in value by 10%. So this is on a every day on a coast-to-coast basis. Every day you will get that 5 times movement on a percentage basis of the underlying asset. Okay, so this is on a every day on a coast-to-coast basis. Every day you will get that. This is very important on a percentage basis for how the DLC is underlying asset. Okay, so this is on and so this is where it gets a bit more. This is very important, a bit more advanced, I would say. Where on the US indices, they are very important. I want today to shed light on how does it actually work, because counterintuitive, right? The US market is closed during operation hours. So how do we launch a product, the S&P 500 and the Nasdaq index DLCs on SGX market where it's only traded during 9 a.m. to 5 p.m. Because counterintuitive when the US market is closed, how do you buy and sell this when the US market is closed? Well, the answer is how do we launch a product? It is on the S&P 500 and the Nasdaq index DLC. Alright, so the E-mini US market where it's only traded CME and it is traded when the US during Asian hours, during Singapore time. You buy and sell. So the US index DLCs, the S&P 500 and the Nasdaq DLCs will track or be closely linked to the performance of E-mini S&P 500 and Nasdaq futures during Asian hours. Alright, so that's where you get that 5 times during Asian hours, Singapore time. And then when it comes to overnight, right? Singapore time zone, overnight US market opens and closes, then the DLC will give you that 5 times leverage on a coast-to-coast basis based on the S&P 500 and the Nasdaq cash index that is traded during during US market hours. All right. So this is how we provide that leverage during Asian hours when the US market is closed. We do reference the E-mini index, US index futures that is traded on CME during Asian hours. So we will offer bid and offer quotations on the DLCs during SGX trading hours that is referencing on the DLCs and is referenced to the E-mini S&P 500 and Nasdaq futures that is trading during Asian hours. Okay, so let's quickly look at this illustrative example of the DLC's 5 times performance for the US index DLCs, or for the S&P 500 DLCs. So for example, this is purely illustrative. On 16 May at market close, right? 16 May US market close is about 4 or 5 a.m. Singapore time, right? The S&P 500 index closes at 4,000 points, for example. And so the DLC, we will calculate based on the US index close or 4,000 points. We will calculate the DLC intrinsic close at around 8 to 9 a.m. Singapore time. That is the what's the intrinsic close of this DLC, long DLC, based on the US S&P 500 index close of 4,000 points. All right. So for example, the intrinsic close is 87 cents, for example, right? So this long DLC, 87 cents is the close, intrinsic close value. Okay, so that's the close for 16 May. Then now it's come to Singapore time, it's already 17 May, right? So 4 a.m. US, it's sort of 17 May, 4 a.m. Singapore time, US market close, 4,000 points, DLC close is 87 cents. Then come 9 a.m. on 17 May, Singapore time, when the SGX market opens for trading. All right, so the E-mini futures is at 4,100 level. It gained by 100 points during the, say at opened or in the first few minutes of the SGX market hours open. It has gained by 100 points, right? So we will use that comparison of 4,100 versus the S&P 500 index close earlier at 4 a.m. to give you that. Okay, so 4,100 divided by 4,000 minus 1. So that is the gain on the S&P 500 index that we will use for the purpose of calculating the performance of the DLC. All right, so we will use that to calculate. Let me just do a very quick calculation here so we are clear. So 4,100, divided by 4,000. So that is a 2.5% gain on the S&P 500 E-mini futures during Asian hours, right? At SGX market open. Right, so 2.5% times by 5 of that will be 12.5%, right? So the DLC will gain in value by 12.5%. And so the long DLC over here, the intrinsic close previously was 87 cents at 4 a.m., right? Now at 9 a.m., this DLC will be quoted at around 98 cents, right? That represents a 12.5% gain on the long DLC. And that's where our SocGen, as the designated market maker, will be offering bid and quote quotations for investors to buy and sell the DLC at around 98 cents. Okay, and throughout the trading day, during SGX market hours, if the futures continues to go up to 4,200, 4,300, then right, the DLCs, the long DLC will also continue to gain in value by 5 times that of the performance. All right. So throughout the day, all the way until SGX closes at 5 p.m., we continue quoting all the way. And when SGX closes at 5 p.m., the DLCs will stop, will not be traded anymore, as because SGX market is closed. And then overnight, it'll be 17 May in US market hours. Okay, so US market hours, 17 May, the index closes at 4,200, right? That will be 17 May US, 4,200, but it'll be at, and then the DLC will also have another intrinsic close that's calculated after the 17 May US market close timing at 4 a.m. Singapore time. Okay, by then it will be Singapore hours already, 18 May in the morning. So the DLC, we will look at the intrinsic close of the DLC will be calculated based on this 87 cents from the previous day, times by what is the index close of the S&P 500 index at the market close. So it closed at 4,200, so take 4,200 and compare it to 4,000, the previous day's cash close of the S&P 500 index. So 4,200, divided by 4,000. So there's a 5% gain over that, right? So 5% times by 5 of that is 25%. And so the DLC, previous intrinsic close, is 87 cents. So we will have a 25% gain from 87 cents. So 1.25 times 8, so 25% gain on 87. So you will have about 1.88, 1.89, 1.089 in terms of the value of the DLC. That'll be the intrinsic close. And then if the futures don't move much at 9 a.m. opened, then the SocGen B and R's quotes will also be at 1.089 around there. Okay. So intraday during SGX market hours, you would have to reference the futures to see the performance, and we do display it on our DLC website as well. But if you hold it overnight and you hold it over a few days, then you can see that 5 times performance based on the US market index close. So the cash index of the S&P 500 or the NASDAQ close on the close-to-close basis, you can see how the DLC performs with that 5 times performance based on the cash index if you hold it for more than a day or over a few days. All right. Okay, that was quite an elaborate explanation, but definitely if it's still not too clear, we'll have some examples to show as well to help you to understand this aspect of the US Indices DLC. Okay, so this example of the NASDAQ long 5 times long DLT CZFW, so $1.47 is priced at around $1.50 around there. So we do offer SG bid and ask quotes throughout the day, 1.475, 1.48 over here. So it's a 1 tick spread. On the NASDAQ long DLC, we do provide this quote throughout the SGX market hours, 9 a.m. to 5 p.m. And then you can see on the website also, we have the last intrinsic close. So this daily intrinsic close published around 8 to 9 a.m. every day, Singapore time, based on the US index close that earlier at around 4 or 5 a.m. Okay, so this is where we publish the daily intrinsic close of the DLC over here. And this intrinsic close on 3rd June, for example, fell around minus 13.6% compared to the 2nd June intrinsic close of 1.557. Okay, so that's why you can see that 2.67%. That's at the 4 a.m. close this morning, earlier in the morning on 3rd June. 2.65, 10% times by 5, so that's around 13.6%. That's where you can see the 5 times performance. All right, but on an intraday basis, let's say now it's at around 10 a.m. or 11 a.m. Singapore time, right? And you can see that the E-mini futures is trading at around this level on the NASDAQ one, while the DLC is priced at $1.47 around there. So that's where the 5 times performance is, because the E-mini futures is up by around 1.5%. So times by 5 of that, that's where the DLC will be quoted at 1.475 and 1.48 versus its last intrinsic close of 1.345. Okay, and so it's the same for the short DLC also. It will drop in value if the E-mini futures or the underlying cash index, gains in value, rises. All right. So you can look at, it's important that you guys reference also the DLC website to find out what is the intrinsic close of the DLC based on the US index market close earlier in the morning at 4 a.m. This is the intrinsic close for which will be, where the 5 times performance will be based on, reference with during Asian hours, during SGX market hours. And that's where the bid and quotes will move throughout the day. All right. Okay. So you can use the DLCs for a wide range of different trading strategies. You can use it for day trading, for swing trading, or even hedging purposes, right? Okay, so the US index DLCs during the intraday, during Asian hours, it doesn't move that much as it does during the US market hours. It can move maybe about 0.5% or even 1% during Asian hours, or even more than that. Today, I think I saw NASDAQ going up to about 1.5 or 1.6% today. But you can, so you times by 5 of that, 1.5% times 5, your potential gains and losses can be around 7.5%. So definitely you can use it for day trading as well during Asian hours, especially if there's high impact news during Asian hours. If China makes a very big announcement that could potentially affect US as well, it could move the E-mini, S&P 500 and NASDAQ futures. Otherwise, if you're not really a day trader, but say you can always use the DLCs for swing trading or even hedging with the short DLCs to hedge your overall US investment portfolio. You can use it to trade it for a period of time. So swing trading and hedging is usually over a period of more than a day. You can hold it for a few days, you can hold it for a few weeks, but generally the DLCs are leverage products. So we do not recommend that you hold the DLCs for long periods of time. Try not to hold it for a few months or even a year, because that's where the compounding effect or even the cost and overnight cost and fees can eat into your returns. All right. So some examples over here of how the US index DLCs work. So this is a bit of a complicated chart here with a lot of things going on. Let me try to simplify it for you. So this is an example of a day trade and an overnight trade. So you can see at the top, you can see there's the SGX market hours. I've labeled there SGX market hours, 9 a.m. to 5 p.m. Singapore time. And then later on at 9 p.m., that's the NASDAQ hours, before we go back into the next day again at 9 a.m. to 5 p.m. SGX hours. All right. So during the first SGX hours I've labeled over there, 9 a.m. to 5 p.m., the NASDAQ E-mini futures dropped by minus 0.66%. Okay. So that is on the NASDAQ E-mini futures. All right. So that's when the short NASDAQ DLC CYEW actually gained by 3.7% on the last bid versus the opening bid. So throughout the SGX market hours, it gained by around 4%, 3.7%, to rise up to $1.61. So that's a potential, day trade where you can make 3 or 4% during SGX market hours, just basing on the move that is referencing the E-mini futures on the NASDAQ index. All right. So, but if you're looking for a bit more gains on that sense, or a potential return, high potential return, then you would consider maybe holding the DLC overnight or even for a few days, because you can see on this day, on the 3rd June, the NASDAQ 100 futures fell further, by minus 2% between 5 p.m. Singapore time and 9 p.m. Singapore time, before 9:30 p.m. before the US market opened. It fell another 2% that day. And overall, the NASDAQ 100 index fell by around minus 2.66% for the 3rd of June, during the US market session. Overall, minus 2.66% US market close. So if you had bought the DLC, the short DLC at $1.61 at the close, 4:59 p.m. Singapore time, and hold it overnight, then the next day you would have seen that the bid, the opening bid and ask of the DLC CYEW would be at $1.78. So this $1.78 represents a 10% gain from $1.61 over there. And that's where the 5 times performance comes from as well, because the NASDAQ fell around 2% overall. Okay, so that's where you can see you can potentially gain, 10% by holding this NASDAQ short DLC overnight to capture all these fall in the NASDAQ futures, followed by the NASDAQ index during Asian hours as well as during the US hours. Right? Of course, if you provided that your view is that it's correcting and it's going down, and you bought the short NASDAQ DLC. If you had bought the long NASDAQ DLC instead, then your losses will also be amplified. Similar loss of around 10%. If you had held it overnight, if you had traded intraday, you would have lost around 3 to 4% as well. Okay, so your gains are amplified, but also your loss are also amplified if you got the direction wrong. Okay, if you are holding it for a longer period of time, say for example in these 2 examples over here, between 15 March and 29 March this year, 10 trading days in total, 10 trading days, the S&P stock index gained by around 10% during this period of time. And we also saw that the S&P long DLC CYAW gained by around 65%. All right, during this period of 10 trading days. Also, between 5th April to 5th May 2022 this year, this is a total of 23 trading days. The S&P stock index declined by around 10%, and that's where you see the short DLC gained by around 49%. Okay, so if you are able to hold it for a longer period of time and catch a nice trending market, you could potentially gain more than that 5 times leverage. You see over here in the first example, 15 March to 29 March, the S&P index gained by 10%. So times 5 of that is 50%. But overall, the S&P long DLC CYW gained 65%. So there is the element of compounding effect, which I'll explain in a bit, when you are able to capture a nice trending move on the underlying index. Right, you can see from between 15 March to 29 March, there's a nice green candles all the way up to the 4,600 level for the S&P 500 index. Similarly, on the second trade over here, 5th April to 5th May, the stock index dropped by 10%, and it's roughly around the same level. So there's not much compounding on this because of a bit of a rebound on the S&P 500 index between the 15th April to 20th April period over here. So the performance is only in line for around 5 times of that, right? The stock index declined by 10%, so the short DLC gained by 50% times 5 of that. Okay, so that is examples of a day trade. You know, if you trade during Asian hours, you could look at some nice gains of around 3 to 4% if you're doing a day trade. If you're able to hold it overnight or even a longer period of time, 10 trading days, 23 trading days, you could potentially be have larger gains. But also, once again, reiterating that your gains are amplified, but also make sure that you understand that your losses can also be potentially amplified. So the short DLC on the first trade will have also lost around 50 to 60% based on the first trade. On the second trade, the longer trade, 23 trading days, the long DLC could also lose around 50 to 60% if, because the direction went against your direction of the DLC. All right. So day trading, swing trading, hedging, etc. You can use these DLCs for your sort of tactical positioning as part of your overall US investment portfolio that you have, or your stocks that you have. You can use this to hedge. If you see a sharper correction on the US market, you could use these DLCs, the short DLCs, to make some gains to offset your losses on your investment stock portfolio on the US shares. Okay, and of course, during Asian hours, it is traded during Asian hours only. So there are benefits to it, but there are also cons, pros and cons. You are able to get in early before the US market open. You are able to react to high impact news during Asian hours, but note that you are not able to trade the DLCs during US market hours. You will have to hold it overnight, and the earliest time that you can buy and sell the DLC would be at 9 a.m. Singapore time the next day. Okay, when SGX market opens. All right, so I mentioned compounding effect very quickly in the last 10 minutes I have on this slides before I go into the website. Compounding effect is a very, very important feature of the DLCs. It is unique to the DLCs and it's similar to like how leverage and inverse ETFs work. All right, so compounding effects it can work for you or against you. In a strong trending market, it can positively enhance your return, but in a very sideways market or very volatile market, sideways market, it can negatively impact your returns. Okay, so let's look at some examples here, just so that it's better illustrated with the examples over here. On the table on the left, you can see that the underlying asset start off at 100 points, for example, and every day, and on day one, it makes a 1% gain to 101. On day two, it goes up to 2% to 103. And on day three, it goes up by another 2% to 105.08. Altogether, the underlying gain about 5% over the 3 trading days. Whereas for the DLCs, you can see that on day one, every day it gives you that 5% movement. On day one, the underlying is up by 1%, so the DLC is up by 5%. Day two, 2%, 10%, 2%, 10%. And overall, the DLC has risen in value from $2.50 to $3.18. That represents a 27% gain. All right, so 5% gain on underlying times by 5 is 25%, right? So altogether, where did that extra 2% come from, right? Because the DLC gained 27%. Where did the extra 2% come from? That's because of the compounding effect. All right, every day your gains and losses are locked in. All right, see, the second day, your 10% gain is based off $2.63, not $2.50. Your day three, your 10% is also based off a higher base, 2.89. Therefore, it can go up to $3.18. All right, so every day your gains and losses are locked in, and so you have that positive compounding effect if you manage to capture a nice trending market, whether it's going up or whether it's going down. Okay, but where it doesn't work for you is in a volatile or a very sideways market. Okay, so let's look at this example on the right over here, this table. Similarly, the underlying starts off at 100 points, and then it gains by 2% on day one, down by 4% on day two, and then up by 7.3% on day three, to give you an overall gain of 5%. All right. Sorry, I think my head is blocking the return on the DLC. Let me move a bit to my left. So the DLC, similarly, every day you get that 5% return on the underlying steady performance. All right. So first day, 2%, DLC gains by 10%. Second day, underlying is down by minus 4%. The DLC is down by minus 20%. And the third day, the underlying is up by 7.3%, and the DLC is gains by 37%. All right. So every day you get that 5 times movement. But remember that your gains and losses are locked in every day. Therefore, on the second day, when it dropped by 20% on the DLC, the third day gain of 37% is based off a lower base of $2.20. All right. So therefore, overall, the DLC only gives you that 20% gain. So 5% times 5 is 25%, but the DLC is only able to provide a 20% gain due to this compounding effect. Okay, every day your gains and losses are locked in, so there's that compounding effect. Okay, I cannot stress this enough, but if you hold the DLC for more than a day, then the compounding effect will kick in. If you hold it for a long period of time, the compounding effect could potentially be a lot more drastic as opposed to holding it for 2 or 3 days. So do take note that the DLCs are not buy and hold product. You're not supposed to be buying and holding this for a long period of time. It's meant for short-term, sort of tactical sort of allocation of your portfolio where you can trade it for intraday, a few days, a few weeks, a month or so, but definitely please do not hold it for months at end or even a year. Okay, because of the leverage factor of this compounding effect, as well as the overnight costs and fees. Okay, compounding effect, please visit our website. I'll show you guys where later to learn more about the compounding effect. Please make sure that you understand how the compounding effect impacts the performance of the DLCs before you actually trade the DLCs. So a very clear example here over here, it's the historical performance of the S&P 500 index. So you can see that the S&P 500 fell by quite a lot between 1st April and 12th May, right? The S&P 500 went down by quite a lot. Sorry, apologies. I think it's missing the percentages over here. But I think the S&P 500 index fell by around 5 to 10% on the S&P 500 index. While we saw on the 5 times short S&P 500 DLC, this orange line, it gained by around 70 to 80%, right? So it's more than 5 times that of the underlying stock. While the short DLC, the long DLC fell in value by around 40 to 50%. Okay, so there was an outsized gain, about 70 to 80% gain on the short DLC when the underlying S&P 500 index fell by 5 to 10%. Okay, more than 5 times that. However, if you hold it past the 12th of May, if you hold the DLC all the way up to 31st May, you will have seen that your short DLC has lost some of its gains. It drops from about 70-80% to down to about 40% gain only because of a slight rebound on the S&P 500 index. Okay, so every day your gains and losses are locked in. So do note that there is this compounding effect that could make a bit of a difference, make a very big difference in terms of your performance, if there is a large movement in the underlying index or stock. Okay, so take note of the compounding effect on the DLC before you start trading the DLC, all right? And also one of the last few points I wanted to make was on some of you might be afraid, the S&P 500 DLCs, and the Nasdaq 100 DLCs, the US market is closed, right? Okay, so far you are basing on the futures, but how can I be assured of the liquidity that you can be able to buy and sell the DLCs during SGX market hours when US market is closed? Right, so us SocGen, we've been doing the DLCs for 5 years now on SGX securities market, and we've been providing liquidity, consistent market making quality for all the DLCs, not just the US index DLCs, but also the Hong Kong ones and as well as the Singapore ones. And for the US ones, we are able to make very tight and consistent market making on this. We average about 1.1 ticks on the S&P 500 and Nasdaq DLCs with a 70 basis point spread. So that's 0.7% spread or even lower than that. Some of them are at 0.3, 0.5% spread for 5 times leverage DLCs on the S&P 500 and the Nasdaq indices. Okay, so we are making consistent spreads, and we are also quoting size on the bid and ask quote. Some of them are thinking, okay, there's some of the DLCs they might not trade actively. So the US indices DLC, we've just launched it. They might not be traded at 9 a.m. sharp in the morning. The first trade could come in at 9:30 a.m. or even 10 a.m. right? So, but it does not mean that you can't trade it from 9 a.m. You can trade the DLC from 9 a.m. sharp because we will be the designated market maker SocGen. We will be offering the DLCs, the quotations, the bid and offer quotes on both sides, bid and ask volumes and quotes and size on the DLC starting from 9 a.m. Okay, we'll be quoting about SGD 4 million notional on each side. So you will see about 800K value on each side. So you can buy up to 800K worth of the US index DLCs. You can buy and sell them 800K worth at a go. But of course, if your size is more than 800K, you want to buy 1 million worth of or 1.5 million worth of the DLCs, you will lift off the first 800K and then we will refill that volume, another 800K within seconds. All right. So you can actually trade as much as you want until we sort of run out of inventory. Okay. So we do provide consistent market making quality throughout the trading day, SGX market hours for these US indices DLCs. And please be assured that there is liquidity for you to buy and sell the DLCs throughout the day, even if there's no actual trades that happen. Okay. And the cost and fees, right? So the cost and fees on the DLCs is if you trade it intraday, if you trade the DLCs intraday, there is a trading fee that's charged by SGX as well as the commission by a broker. But that's all, right? We don't charge. There's no charge from SocGen on the if you buy and sell the DLCs during the trading day. Okay. But if you hold the DLCs overnight, if you hold it for overnight, you hold it for a few days, there will be an overnight cost and fees that is charged, and this is priced into the DLC B and ask code. All right, and we'll publish an intrinsic close. You heard my term just now, the intrinsic close. We do publish the intrinsic close every day, end of day, on the DLC website for every single DLC, the intrinsic close, and this intrinsic close takes into account the overnight cost and fees. Okay, so we do not charge anything on top of the BNS code, which is the intrinsic close over there, the value of the price of the DLCs. We do not charge you the overnight interest separately. It is all priced into the price of the DLC. And we do publish this daily close value on our website every day for every single DLC. We do publish the absolute amount. So this is minus $0.000318 value of the $1.80 DLC. Okay, so this was charged from the value of the DLC the previous night. And this 0.000318 is a minus 0.03% sort of loss on the price of the DLC that is charged overnight. Okay, so the DLCs, the fees are generally it's not that much of a difference, or it's not a very huge impact to your performance of the DLC, price of the DLC. If you hold it for a few days, or if you hold it for a week or two, but definitely if you hold the DLCs for a long period of time, months at end, then you would see that these overnight costs and fees can eat into your returns. Okay. And the last thing I wanted to share about is the airbag mechanism on the US indices DLC. This is something that's also all the DLCs do have an airbag mechanism. If you have been to any of my previous sessions on Tiger Brokers, you have heard of this airbag mechanism as well. All the DLCs do have an airbag mechanism that is inbuilt into the product itself. This airbag mechanism will be triggered when there's an adverse movement on the underlying index, and it is meant to reduce your exposure in the case of such an adverse movement on the underlying stock or index. Okay, so what is unique about the airbag mechanism for the US indices DLC is that the airbag cannot be triggered during SGX market hours. All right, so even as the E-mini futures, S&P 500 or the Nasdaq futures drops by 10%, the trigger is at 10% of the index move, right? So for a 5 times leverage equity index, it is a 10% index move. So if the underlying index drops by 10%, then the airbag will trigger. Or for the long DLC, if the underlying index gains by 10%, then the 5 times short DLC would the airbag will be triggered. Okay, so it's only triggered in the direction that's against you. You know, if the index does move by 10%, drops by 10%, your 5 times short DLC will be up by 50%, and there's no cap on that. Okay, so back to that, what is unique about this airbag mechanism for the US indices DLCs is that it's not triggered, cannot be triggered during SGX market hours, right? It is only triggered during US market hours when the DLC is not traded. Okay, so during the Asian hours, during SGX market hours, if the E-mini futures drops by 10%, for example, the airbag will not be triggered for the 5 times long US index DLC for the S&P 500 or Nasdaq long DLC, for example. All right, even if the E-mini futures on the S&P 500 and the Nasdaq drops by 10% during Asian hours. Okay, but if the S&P 500 index continues to be down by 10% during the US market hours that day, later at 9:30 p.m. Singapore time, if it's still down by 10%, then and the cash index opens down 10%, then the airbag will trigger. And the usual airbag sort of intraday reset will happen for that US index DLC. Okay, so this is really an extreme scenario where it requires a plus minus 10% index move on the on the benchmark index, on the US S&P 500 index or the Nasdaq 100 index. So it's really quite an extreme market condition for the US index to move by 10% intraday. Okay, this only happens intraday. If it's a sharp fall during the trading during the same trading day where the index moves by plus minus 10%, then the airbag will be triggered. Okay, but this is not for accumulation. This is not accumulation. This is only intraday during the same trading day. Okay, so it's quite rare that happens for the US under indices. Not sure when, but I think probably back in 2008, when the great financial crisis in 2008, that's probably when you might see close to or even maybe even more than 10% move on the underlying index. Okay, so it doesn't happen every day, but this airbag mechanism is something that you should take note of on the US index DLCs, especially if you are holding overnight. Okay. So where to find more DLC information, you can find it on our website, dlc.stockgen.com. Let me just quickly take the last 10 minutes to just show you our website. So I'll stop sharing my slides and scoot over to the browser to show you guys. As well as the US equity indices page over here to help you to understand a bit more about the different intricacies of the US index DLCs, how it tracks the S&P 500 E-mini futures that you have. We do display the E-mini futures over here, as well as some of the historical performance on the US stock index. So I think the last time the US index, okay, one time over here. Right, so this is percent above 10%, 10% and above. Similarly, also it went down by minus 10% one time over here and one time in 2018. Okay, so you can see some of this over here as well as the airbag mechanism and read more about it and how it works overnight. Okay, so this is statistical information for you over here to be able to derive to see how does the 5,000 movement come about. Okay. And then you can also, so that's where you can see the different S&P 500 DLCs. Looking at the Nasdaq one, similarly, we have 2 of each. 2 long DLCs and 2 short DLCs as well for you to choose from with different price ranges. So yeah, and with different sensitivities. Okay, so wanted to trigger our website, and that's all I have for the US indices DLCs over here. All right, so if you have any questions on the US indices DLCs, please do give us a call. We have a hotline, 6226-2828. Please give us a call, and we'll be here to, my team and I will be happy to answer any questions you might have on the DLCs, or also any feedback that you have on the DLCs. All right, so I think my time is up. Thank you everyone for joining me today, and I hope that this session has been helpful for you. Please do reach out to us if you have any questions on the US indices DLCs as well. Okay. All right. Thank you very much. Thanks, everyone.